The entire football world held its breath when Cape Verde came within inches of producing one of the greatest upsets in World Cup history. Against all expectations, the tiny island nation pushed Argentina to a dramatic 1-1 draw after full time, forcing extra time and making millions wonder if football's biggest giant was about to fall. In the end, Argentina survived with a 3-2 victory, but Cape Verde had already accomplished something remarkable. They had captured the world's attention. And that, right there, is what the whole economy is all about. For a country of barely 500,000 people, simply qualifying for the World Cup was considered a victory. Pushing one of the tournament favorites to the brink was something almost nobody predicted. Days after, the tweets and comments kept pouring in. But while billions of fans were debating tactics, refereeing decisions, and whether it's called football or soccer, another game was unfolding behind the scenes. Investors weren't watching the scoreboard. They were watching stock prices, airline bookings, jersey sales, advertising revenue, and quarterly earnings. Because the biggest competition at the World Cup isn't always played on the pitch. Sometimes it's played on the stock market. The World Cup isn't just a competition between nations. It's a competition between businesses, all fighting for a share of billions in consumer spending. Now, will you just settle as a spectator? Or you will find out how you can get a piece of pie. Every few years, the internet revives the same debate. Which is bigger, the NFL or the FIFA World Cup? The numbers tell an interesting story. Super Bowl 60 averaged about 125 million viewers in the United States, making it America's biggest annual sporting event. Meanwhile, the 2022 FIFA World Cup engaged around 5 billion people worldwide across television, streaming, social media, and digital platforms, while the final alone attracted roughly 1.5 billion viewers. That's exactly why companies don't just see soccer. They see customers. With the expanded 48-team tournament expected to attract more than 5 million fans into stadiums across North America over 39 days, that's well over 120,000 spectators entering venues every single day, before counting the millions more traveling between host cities. This is one hell of a huge economy. And so, the real tournament begins. Airlines compete for passengers. Hotels compete for bookings. Restaurants compete for hungry fans. Sportswear brands compete for jersey sales. Even the local coffee shop outside a stadium suddenly finds itself serving thousands of customers it never had before. Now to the amazing part. Was it a coincidence that the United States secured the rights to host the 2026 FIFA World Cup during the nation's 250th anniversary? Not exactly. While Canada and Mexico are co-hosts, the U.S. will stage the majority of the tournament, including the final. This, of course, is a masterclass in positioning yourself where opportunity is expected to arrive. Governments do it. Cities do it. Businesses do it. Investors learn to do it too. How about you? Even before the 2026 World Cup kicked off, we were already flooded with Adidas and Nike commercials. Every highlight reel, every billboard, every social media feed, and every star player's boots seemed to carry one message: buy our brand. That's because companies like Adidas and Nike don't see the World Cup as just another football tournament. They see it as the biggest marketing stage on earth. During a typical year, Nike generates around $46 to $51 billion in annual revenue, while Adidas brings in roughly $22 to $24 billion. But World Cup years consistently provide a major boost to football-related sales. In 2018, Adidas credited the tournament for record football category revenues and sold millions of official match balls and national team jerseys. In 2022, despite broader economic challenges, Adidas reported exceptional double-digit growth in its football division driven by the World Cup, while Nike also experienced strong demand for national team kits and football apparel. Now think like an investor instead of a fan. Imagine you had $20,000 sitting in a savings account 1 year before the tournament. Rather than leaving it idle, you invested it in a diversified portfolio that included leading sportswear companies as investors anticipated World Cup-related demand. Even a 15% return over that period would grow your investment to about $23,000, an extra $3,000 without selling a single jersey yourself. The lesson isn't that the World Cup guarantees stock market profits. It doesn't. The lesson is that while millions of fans are busy buying the products, a smaller group of investors is quietly asking a different question. Who makes money every time someone buys that jersey? You know who never misses a World Cup? The camera. It gets all the best spots in the stadium and somehow still makes billions. Forget Messi or Mbappe. The real MVP of the World Cup is the TV camera. It gets paid whether your team wins or cries on the flight home. Long before the first whistle blows, media companies are already locked in a bidding war. For the 2023 to 2026 cycle, FIFA generated about $4.3 billion from the sale of television and media rights alone, making broadcasting its single largest source of revenue. Broadcasters and streaming platforms pay these enormous fees because they know billions of viewers will tune in, allowing them to recover their investment through advertising, subscriptions, and sponsorships. But this opportunity isn't reserved for billion-dollar corporations. Every viral goal, emotional celebration, or controversial decision creates demand for highlight analyses, reaction videos, podcasts, photography, short-form content, newsletters, and social media commentary. While major networks monetize the live broadcast, independent creators monetize the conversation around it. The lesson is simple. You don't have to own the broadcasting rights to profit from the World Cup, and you don't have to be just another die-hard soccer fan. Maybe it is time to get your camera and make some bucks. So media companies pay billions for broadcasting rights. But why? Is it just love for the beautiful game? Of course not. That would be like buying an entire shopping mall because you wanted a pretzel. Imagine paying $100 for a fishing rod just to catch a $5 fish. Sounds ridiculous, right? Unless you know there's a $1,000 fish swimming in the lake. That's exactly how media companies think. Take Fox Sports. Through its long-term agreement with FIFA, Fox broadcasts the World Cup because it knows the audience will attract advertisers willing to pay premium prices. During the 2022 FIFA World Cup final, Fox averaged nearly 26 million viewers, making it the most-watched men's World Cup final ever on U.S. television. Those millions of eyeballs translated into millions of advertising dollars. The same strategy works even better during the Super Bowl. In 2025, a 30-second commercial sold for as much as $8 million, proving that attention has become one of the world's most valuable commodities. Does this send media stocks soaring overnight? Usually not. However, smart investors often anticipate these events months in advance, meaning much of the optimism is already reflected in the share price. But over time, higher advertising revenue and stronger earnings can improve a company's financial performance. So don't just watch where the ball goes. Watch where the advertising dollars go. Adding media companies alongside sportswear can be another way to build a diversified portfolio around businesses that profit from the world's biggest events. Away from the media, let's talk about the people who actually show up. Because here's a funny truth. Football fans don't photosynthesize. They can't survive on sunshine and team spirit. They need flights, hotel rooms, burgers, coffee, taxis, and probably a souvenir they'll regret buying 6 months later. That's exactly why host countries see the World Cup as much more than a football tournament. During the 2022 FIFA World Cup, Qatar welcomed more than 1.4 million visitors, with tourism contributing billions of dollars to the country's economy through hotels, restaurants, transportation, retail, and entertainment. The tournament also helped introduce Qatar to millions of potential future visitors, boosting its long-term tourism strategy. The same pattern has repeated for decades. Russia 2018 attracted over 3 million spectators across its stadiums, while Brazil 2014 welcomed roughly 1 million international visitors, generating billions in tourism spending. Even South Africa 2010, the first World Cup held on African soil, drew more than 300,000 international visitors, creating jobs and injecting billions of rand into the local economy. For investors, this creates another opportunity. Airlines, hotel chains, restaurants, ride-sharing companies, payment processors, and even amusement attractions all compete for the same thing, the wallet of every traveling fan. The World Cup may last only a few weeks, but for the tourism industry, it's often the busiest business season of the decade. Okay, before you think you can just run around the next World Cup and accidentally become a millionaire, let's slow down. If making money were that easy, every fan wearing face paint would leave the tournament driving a Lamborghini. Spoiler alert, they don't. In investing, excitement is free. Profits are earned. Let's bust the three biggest myths. Myth number one, every host country gets rich. Not necessarily. Brazil spent an estimated $15 billion preparing for the 2014 World Cup, yet several studies found the long-term economic impact fell well short of expectations. Stadiums in some cities became underused after the tournament, proving that expensive infrastructure doesn't automatically create lasting wealth. Myth number two, every company connected to the World Cup makes money. Wrong! Sponsoring the tournament is incredibly expensive, and not every campaign delivers enough sales to justify the cost. A flashy commercial doesn't always translate into bigger profits. Investors care about earnings, not applause. Myth number three, buy the stock after the tournament starts. That's like showing up to a Black Friday sale on Saturday and wondering why the best deals are gone. Markets usually anticipate major events months in advance. By kickoff, much of the optimism is already reflected in stock prices. The biggest lesson? The World Cup doesn't magically create wealth. It rewards the people who prepared long before the opening whistle. The most dangerous myth is thinking you should only watch out for World Cup events. If that's your strategy, you're basically treating investing like Christmas, showing up once a year and hoping Santa leaves a stock portfolio under the tree. The real lesson isn't soccer. It's positioning yourself before everyone else notices the opportunity. The same principle shows up everywhere. Every Black Friday, American shoppers spend billions of dollars in just a few days, boosting retailers, payment companies, and delivery businesses. The Super Bowl attracts over 120 million viewers, creating massive opportunities for broadcasters, advertisers, restaurants, and food delivery companies. Even Amazon's Prime Day generated more than $14 billion in U.S. online sales in 2025, making it one of the biggest shopping events of the year. Sometimes, the biggest opportunities aren't even tied to sports. Take NVIDIA, for example. As demand for artificial intelligence exploded, the company's stock surged dramatically, pushing its market value beyond $4 trillion in 2025. The investors who benefited most weren't the ones buying after the headlines. They were the ones who saw the AI wave building months and years earlier. That's the hidden lesson behind the World Cup. Don't chase events. Position yourself before they happen. Because by the time everyone is talking about the opportunity, somebody else has probably been quietly making money from it for months. Where are you positioning yourself for the next big opportunity? Let me know down in the comments. I'd genuinely love to hear what industry or company you're watching. Maybe it's AI, maybe it's robotics, maybe it's renewable energy, or maybe you've spotted something the rest of us haven't yet. Just don't wait until your barber starts giving you stock tips. By then, Wall Street has probably already moved on. If you enjoyed this breakdown, you'll definitely want to watch our video on SpaceX, where we explored another opportunity that could reshape the future of investing. And if you want to learn how to spot opportunities before they become headlines, hit that subscribe button. Because on this channel, we don't just follow the money, we follow where it's going next. I'll see you in the next one.